I'm very excited to welcome back Kirian, Deso, Hest back to the show for our annual year-end look at the next 12 months, right? 2024. Last year, pretty much every year you've made predictions that have come right. The last time we talked, you said we're going to have a down move because they're going to keep rates high, that the market won't be able to handle that, but they're going to have to turn the money printer on and get more and more draconian. And we're just going to see tremors in the markets, in the bond market. We've seen that. And so here we are, liquidity is pumping, crypto is up, tech is up, everyone's happy with the Santa Claus rally. And here we are heading into next year with rates still high. What are you thinking?
Well, first off, I'm happy to be back. I seem to have collected a hat trick now with 3 years with pretty good predictions.
Yeah.
So, yeah, talking about the last year, well, the bond market was kind of going in its direction, so that was pretty easy. But there's a limit to how high rates could have gone anyway. And it turns out that, what was it, 5-6 months at 5.5%? That turned out to be the limit because Jerome Powell has pivoted right at the end of the year. So that's good for me in my videos, like, you know, the predictions I make on your channel.
Yeah.
So yeah, something has him spooked, which means that I don't think rates are going to go up for a while. Not voluntarily, at least. You know, there's always the repo trouble that might come back. And we'll talk about that in a moment. But yeah, it's quite predictable, honestly, simply because we are now in that end time scenario. We're already in hyperinflation. We just don't know it yet because to us it doesn't look like it. The same way as it didn't look to Venezuelans in like 2012, you know, before all the big exchanges happened. And now everybody's like, oh yeah, of course, you know, you shouldn't do that. But back in the day, they didn't know. Like we don't know. And the answer is simple. There's simply too much debt. I think the US is closing in on 3 trillion now in almost 6 months, ever since the debt ceiling debate got resolved. It's not 3 yet. It's something like 2.34, well, multiple trillion, like 2+ trillion in less than 6 months. It's mind-boggling. We're starting to that's another sign that inflation is real, even when you don't see it in the CPI, simply because we're now treating trillions like we used to treat billions.
Exactly.
And we remember that. That's within our lifetime, even. So it's just going to go faster and faster, and pretty soon we're going to start talking about quadrillions. Well, soon, maybe 2030-ish, but you know, it's still a whiles away. We're in the double trillion era. We'll go to the triple trillion era when the US, well, technically the US debt is already there because, you know, you can talk about the national debt, but who's going to pay the national debt? There's people living in the country, the taxpayer.
Yeah.
Is the taxpayer solvent? No, because they also have personal debt. And who pays their income? Well, the corporations, when they have their job, or do the corporations have debt? Yeah. So you count it all together, the US's total debt, that's over 100 trillion. That happened this year. It's now like 104, 105. I don't know. I don't really care anymore because it's going up so fast.
Right.
It's not even talking about the unfunded liabilities of 220 trillion.
Yeah. Well, I think that's why your macro predictions have been correct. Like, because since we've been talking for the last 3 years, you've just said it's going to get bigger and bigger and bigger, and it does. It's getting exponentially bigger. I mean, like in the financial crisis, it was a big deal for them to approve a $1 trillion package. We need something with a T on it. Yeah, now it's like every few months. So
I measure things in tarps.
Yeah.
Literally, since the debt ceiling, the US printed well, 3 times in TARP. So within 6 months, there's been 3 TARPs, 2.4 trillion.
Yeah. So okay. So that means that you're right. Hyperinflation. The currency is being devalued. Does that mean assets have to respond and go up? Yep.
We've seen that.
Mm-hmm.
Even when the Fed's been doing QT, but the Fed's been sneaky because they already did QE printed a whole bunch of money during COVID. They printed so much of it that it was far too much. So they gave people a risk-free interest rate in the RRP, the overnight repo, where they say if you lend cash to the Fed, you get a treasury as collateral, and the Fed pays you interest on the cash you store at the Fed, which is insanity because the Fed can print money. So why do they need to lend cash? They don't. Where's the money coming from that these people receive as interest? It's just printed. It's just more unbacked new money.
Oh man, you're right. You're right.
So that was just a reserve of cash, effectively, that has been drained this year because the Fed's been doing QT. So officially they haven't been buying anything, which also they haven't. But by God, it has to be just backroom deals or messing with how many offers they actually accept for RRP, because that they're all obviously talking to the banks, the counterparties of RRP. Not everybody has access to RRP. It's a closed club. And it's the TGA refill, the Treasury's general account, is the money that the government actually has, which they keep at an account at the Fed, because where else would you store hundreds of billions? That's been going up at the same time that RRP is going down, plus QT, plus issuance. So if you take the amount of money that the US government has issued in order to refill the TGA after June, plus the amount of bonds or liquidity that the Fed takes out of the market via QT, then you're basically already at the rate that repo has dropped over the last few months. So there's been many people that have tried to explain how repo works, and it's all very complicated and very smart what they're doing. I barely get it myself, if that. I don't give a fuck, because it's very simple. I see the TGA go up plus QT equal the drop in RRP. I don't care what the mechanics are. I'm observing reality here.
Yeah.
So logic follows that the moment RRP is empty, that's when QT actually starts. And that's when they actually do quantitative tightening. Because they're not doing quantitative tightening now. They're swapping out, or well, the way to do QT is they simply don't reinvest the proceeds up to a certain amount. So they are still buying bonds in the market, but they're buying less than they're supposed to with the amount of money that's coming in order to stay level. And that's why their assets slowly drop. They're just letting things mature. They're not actually selling anything. They're just not buying as much.
Okay.
But that has been covered with the banks. You've probably heard about the treasury auctions this year, how primary dealers have had to absorb more issuance.
Yeah.
Where money do they do that? You know, where's that money coming from? Well, you see the RP do this.
Yeah.
Look at the chart. Just look at the chart. Don't listen to anyone. Don't care. Look at the chart. You have two charts combined going down equals charts going up. Okay, it's very simple. A lot of finance is just ignoring everyone's bullshit and believing your own eyes. So logic follows. RP is empty. Real QT starts. Bond yields go up. Because there's now less demand for bonds than there used to be, even when we know that issuance isn't going to slow down. Because next year's an election year, the US government is not going to cut the budget in the election year.
No way.
No way. The economy would tank.
Yeah.
70% of the US economy is consumer spending, and the bottom 50% don't even pay taxes because they're so fucking poor.
Yeah.
Their money, their consumer spending is basically government issuance. So no wonder that the budget is going parabolic. That's, now that I remember it, that's something I predicted as well, didn't I? I said in the last video that the interest rate on the national debt was going parabolic, and it was going to take until May, June-ish for people to start talking about it, simply because after the next tax season, receipts would disappoint.
Yeah.
That's exactly what happened. I think May, June, Well, not exactly. People took a little bit longer to start talking about it. It took until like July, September-ish, where around there. But receipts came in like 15% less than expected, and issuance was up 15% more than expected for a good 30% delta. And now, now everyone's talking about it, and it might be just as good a reason as any for why Powell has pivoted, because he knows RRP is going to end in March. And if he goes from higher to longer to just straight up cutting, where does the Fed's credibility go? People have now already called him into question because he last FOMC, he said, higher for longer, not thinking about cutting. He was very adamant rates are going to stay high. One meeting later, suddenly they all expect 3 rate cuts next year.
Yeah.
The earliest expected in March.
Yeah. We skipped the whole phase of where something was supposed to break and spook the markets publicly.
Yeah.
Yeah.
So this is also why the fact that things are going up has me so worried, because in hyperinflation, too much liquidity is the problem. It's not that you don't have any money. You have so much money that prices keep going up because everyone has money, and the shopkeepers are like, well, I don't want to be left out.
Right. So what does that mean? What does that mean for CPI then? Because that's what everyone's watching.
For CPI, the reason it hasn't gone up yet while inflation is still here is simply location of capital. You don't hear any economists talk about it, apparently, except me, because it's extremely vital. But if they start talking about it, it would also prove that quantitative easing causes inflation, and that would make the Fed take accountability. That's what they're not willing to do. So how it works is very simple. Location of capital. Your money, your bank account, your choice. My money, my bank account, my choice. You can't move my money. I can't move your money. Simple as that. Your capital is located with you. My capital is located with me. And you have many locations of capital in the markets where if you put the money there, it can't go somewhere else. You buy an apple, you can't spend that money again. You have to spend more money if you want another apple. If you want a pear instead, you have to spend more money to buy a pear, or not spend the money on the apple in the first place. Those are very simple supply and demand mechanics. It's also something they never talk about. So, if you have money printing, and you print all of that money into one account, and you never move that money from that account, does it cause inflation in apples? No.
Right.
No, it just stays there.
Yeah.
That's the location of capital of that capital, because it's in that location and it's staying there.
Yeah.
We expand the hypothesis a little bit. 2 accounts. Move the 2 accounts, but never moved from them. Does it cause inflation in apples?
No.
Okay. Expand it a little bit more. Let's say we have 100 accounts that all interact with each other, but they never interact with any other account than those 100. Never.
Nope.
Does it cause inflation in apples? No. The stock market is effectively that hypothesis taken to millions, if not a billion worth of accounts. They're all trading with each other, but as long as the money stays in those what I call synthetic markets, because they don't really exist, it's just, agreements between you and I and others about what the paper is worth or what it says, the patterns on the paper, or even digitally these days. As long as the money stays there, it simply cannot create inflation in apples. That's my argument from years ago, where if we were paying for groceries with Tesla shares, we would have noticed the hyperinflation.
Right. That's true.
And it is as simple as that. The bond market is synthetic because it's just a piece of paper. A bond is just a piece of paper. Now, the cash that you get from the bond, that's actual cash. That is stuff that you can use for anything, because you're not buying groceries with US Treasury bonds. You're doing it with cash. So if there's more cash, there's more inflation. It's really that simple.
Right.
So the bond doesn't really matter, but it does matter where the cash comes from. And QE prints money into restricted accounts.
Yeah.
Namely bank reserves. All that money is being piled up in the reserves of banks so that after 2008, if 2008 were ever to happen again, you basically have got like a multiple TARPs worth of backup in the bank reserves that can take that blow. It's a buffer. It's supposed to be a buffer, but it's not, because it's an imperfect buffer. It's an imperfect account. Money can leak from it, meaning that it's not entirely restricted. They can lever that shit up. But they cannot use it to buy apples, because then they spend it,
Right.
and it's no longer a reserve. It has to stay in the account.
That makes
So
sense.
they've basically lent it out, or lent the right to it out, to hedge funds and brokers and such, because what do they do with the money? They have to put it in the market, because they're market funds.
Yeah.
They don't buy apples with it. They buy Apple with it.
Yes.
And that's why I've been using apples all this time, because you just take away the S, and
It caused inflation in the apple. Yeah.
So all the inflation that has been happening since 2008, the CPI inflation, I mean, what we consider inflation, that's not actually been inflation. That's been the quote unquote leak that comes from the stock market, because the stock market still pays dividends. And some people do take their profits no matter how fast it goes up. But still, if people were to try and take all their profits, the entire market would try and sell, all that money, all that value would just evaporate. So you got to keep people in the stock market, simply because the amount of actual cash in circulation is nowhere near the value of the market. It's unexplainably high, that market, compared to the actual amount of cash that exists. How do you keep them in? Line goes up.
Yep.
Just like any Ponzi, you just offer a guaranteed return. And people will move their money because they're greedy.
Exactly. So, I mean, so it seems like the similar situation to what we saw from like 2008 to 2020.
We're exactly back there now.
Okay, so you don't think we'll have another spike in the CPI then that'll spook markets?
Yes, we're going to have one. I just don't know what causes it. See, the reason why we had the whole inflation thing happen in 2020 and beyond is because we gave prices a reason to move up. There's two things that moves prices up: supply and demand, but you have to have reasons for those. If the supply goes away, prices will move up no matter how much money you print or not.
Right.
It's that simple. If demand goes away, prices will fall, even if you print a lot of money.
Yeah.
That's also my worry with crypto. At some point the price, the reason to use it just falls away. So when we shut everything down with the pandemic, we created a lot of logistics bottlenecks. We told people to stay at home, and a lot of businesses just lost the reason to buy stuff. A lot of companies couldn't ship the stuff to begin with, and we basically kicked supply in the balls. But at the same time, we printed a lot of money, gave everybody stimmy checks, so demand couldn't drop. That's the logical reason for prices to go up. So prices did go up. And the Fed said, nah, it's no problem. Just keep giving people more money. Don't let the supply chains recover. It's transitory. You had to slow people down in order for the supply chains to recover. The cart before the horse thing. So right now we're in the same situation as what caused prices to go up. Because if the money hadn't been there, prices wouldn't have gone up. If money, if you have supply that drops, same amount of demand, and that demand has enough money to, vie for the available supply, the price must just go up and up and up, because you have less supply. Somebody needs to be priced out of the market. And you keep giving people more money, nobody can be priced out of the market, so the prices just go up and up and up. People will miss a cycle, but the next cycle, those people have more money. So the bottom floor, the person who doesn't get the stuff, needs to be higher. That's why prices move up. That's where the CPI inflation came from. But the reason why that CPI kept going up is because people said, well, just take a bit more money out of the stock market and pay for it with that.
Right.
That's where the source of liquidity came from. The stock market that keep going up, crypto that kept going up. That's also the reason why inflation is usually reduced by increasing interest rates, because we live in a fractional reserve society. If you most money is created by banks, which lever up principal, and that levered up principal is lent out and then returned, and then the interest rate is new money. That's their profit for the bank. But that levered up money is still money. You put it into another bank, it kind of becomes principal, and you can lever it up again and again and again and again.
That's my point, though. It's like, see, if there's no supply crunch in the logistical supply chains or whatever, there's no
Right,
disruption. Why
right.
would
Inflation coming back.
Yeah, like obviously there's a price inflation in the assets, but as far as like the CPI, if that doesn't happen, then we're back to that like just bonanza of massive bubble, huh?
There has to be a reason for people to start buying more apples, or the reason for the apple prices to go up, and people are like, well, no worries, I'll just convert more money from the stock market to cash. Every time they keep doing that, they keep adding cash to the CPI, and that's why the CPI goes up.
Yeah.
Mortgage housing prices are up, record highs.
Really?
Go look at the house price index. It's actually it dropped only a little bit and start going up again.
Oh my gosh, that's crazy.
Yeah. House price drops that you hear about, those big drops, those are local, mostly localized to California. The overall market throughout America is going up. How can that happen without inflation?
Right.
And it's simply a matter of location of capital, I guess, because it's not just individuals buying money or buying houses with money in the housing market. It's also corporations, Airbnb, the rights and stuff that all have bonds on the books that yield like 3% in this environment, and they would like to have newly made loans because they yield like 7 or 8% to cover for the lower loans that they're going to hold until eternity or sell to the Fed.
Right. So if we're in that kind of regime of just money printing and asset inflation, why, obviously not financial advice is a theoretical question, philosophy. Why should someone not go massively levered long the NASDAQ right now?
Well, technically you should. But the problem is with leverage is that you cannot take too much of a beating. You know, it goes down as fast as it goes up. And that thing that I said last year, that things are just going to get more volatile, that's only going to increase.
Okay.
So it depends. If you're an investor, you will hate it because things won't make sense. Even though stuff might go to, might double and then drop 25%. And if you lever up in the wrong time, you're wiped out right at the beginning.
Yeah.
And there's no way to earn it back.
Great point. Yeah, leverage is bad. Yeah.
It's better to just buy and sell if you want that. You can also buy and hold if you want. But see, the reason why I'm quite cagey and I'm not so keen on going long on anything is because inflation makes everything more difficult. There's a great discrepancy now between the synthetic markets and the real markets. Like I said, if we were to try to use Tesla shares to buy stuff in the supermarket, we would already know there's hyperinflation. At some point in the future, people might try that. But the moment people realize that, converting my shares into cash and buying groceries with that is causing prices to move up, and prices for groceries are here, and the market is yay up high, I better start buying assets as quickly as that itself causes hyperinflation. But that causes the real hyperinflation that everybody talks about because the curve goes exponential. However, that's not really hyperinflation because economists of the last 2 decades have completely gutted the term. What hyperinflation really is the process of infinite money printing. And uninversed, you cannot reverse it. You cannot stop it. You can only slow it down. You can fight it for a while, but then you have to surrender. Look at the Argentinian peso. What happened this year? Because that was what I said last year. What is the thing to look out for next year? And I said currencies. Well, ever since our last video, the Japanese yen has done nothing but devalue until it hit 140.51. More 50% devaluing since our last video. And then it cratered to 141. So that's volatility for you. The Argentinian peso went up to like 150, then it devalued to 350 or something. It had a 15% devaluation. Then Milei gets elected and he devalues it to the black market rate, which is 800.
Yeah.
Argentina peso got beat up this year. Well, it is still a currency, even if people don't watch it as much as the DXY.
Mm-hmm.
Then you've got the Turkish lira, which suffered also multiple devaluations. Well, one big devaluation this year. But there's another thing that I was, hot on the heels of on Twitter. And I've discussed this a couple of times. And then the DXY itself. I mean, I said things are not necessarily going to go up. They're not necessarily going to go down, but they're going to be a lot more volatile. Well, the DXY is basically at the same place where we left it with our last video, except it's gone up and down all year.
Right.
Recently, It was as high as 105, 106 even, I think. What's it at now? It's now at 101.
Exactly. And so because of that move, tech, ARK, crypto, pump. So, it's hard to, so I guess like now, obviously people watching this are investors. They're interested in what they're doing with their money. So looking into the future, it seems like, and you did predict this though. You said there's going to be a like money printed fueled bull market in all things, whether or not it's real or nominal, right? Inflation adjusted or not. But that's what you're predicting going forward, because there's no foreseeable end to that, right? Next year they're gonna have to. Are they gonna have to buy their own debt, the U.S. government, because they're gonna issue so much?
We can talk about that because it's one of the most insane things I've ever heard. A nation that's so broke that they just added 2.4 trillion in debt in 6 months are going to buy back their own debt with what money?
That's their only option, right?
Most of the debt out there for the US is all low interest rate. We're in high interest rate now. They're broke. What, they're going to issue a 4% bond to buy back a 2% bond? Are they insane? It's literally a way to increase your interest rate debt.
Right, but can't they do yield curve control, right?
That's the Fed. That's not the Treasury. The Treasury is yelling is saying that they'll buy back the debt. Well, what debt are they going to buy back? Rates have only gone up.
Yeah.
It only makes sense to buy back higher rate debt with lower rate debt. Because if you're paying 1% on 1,000, that's $10. You pay 5% on 1,000, that's $50. So if you can issue a bond that yields $10 to buy back a bond that yields $50, then your monthly interest rate cost goes down. But if you issue a $50 a month bond to buy back a $10 a month, you're increasing your interest rate cost. It makes no sense.
Isn't the thinking that they're gonna like lower interest rates down and then be able to refinance?
They'll have to buy back Treasury. The only way to do it is to issue short-term. Short-term debt is higher than long-term debt right now because the yield curve is inverted. You have to go back quite a bit to find bonds that yield 5.5%, and the vast majority of the U.S. Debt is now short-term. So what are they going to do to buy back 30-year Treasuries that yielded 5-6% like 20 years ago? They're going to have to. I mean, that's the only way to bring back the monthly interest rate cost, like the yield that they pay on their own debt. It's higher now than it's been in years. So what debt are they going to buy back in order to depress that cost? Not to mention that this is a new program, so they're already spending too much money. The deficit is already 2 trillion, and now they're going to issue yet a new program that's going to cost more money.
Yeah.
It's insanity. Okay, it's not just insanity. It's insanity that we're talking about this.
Exactly.
It's not even insanity that they're going to do it. At this point, I'll believe they're so fucking insane they'll do whatever they want. But
No, that
that it's even an option, that people are even not rioting in the streets over this.
no, that's why.
That's how
Yeah,
insane it is.
that's why it is insane. That's why I'm asking you. So like, there is this multi-trillion-dollar debt bomb in 2024, right?
I don't know if it's going to be in 2024, but I do know that it's going to be in next stage in 2024. See,
Hmm.
that's what I mean with the process of hyperinflation. We are in the process of hyperinflation. It's already hyperinflation because it's going to be this way for the coming future. There's no way to stop this. We can't slow it down, and that's why I'm kind of, not willing to put down a definite date because the system can fight this. The moment the US government decides to spend less, the debt is going to run up less fast.
Right.
The moment the Fed drops rates again, the interest rate on the national debt goes down a bit.
Yeah.
Pretty fast because everything is short term, so it'll be rolled over within a year. The same things that got us up here that fast can get us down there that fast. But it's just that if the Fed drops rates, interest rates, they make lending more attractive. And as I've said before, most money printed in the economy is printed by regular banks lending out money.
Yeah.
So if interest rates goes down, lending becomes more attractive, more money is being printed, and that will be where inflation comes from, and that pushes up the CPI.
Mm.
That requires that money to have a reason to move into the rest of the economy. It does. House prices are going up.
Yeah.
Well, that's one of the ways where house synthetic money turns into real money anyway, because those house prices are based on the prices of the mortgage-backed securities that they're wrapped in. The mortgage that you engage with gets securitized. That security can be affected with liquidity in the markets and be pushed up and such. And that's where house prices go up.
Mm-hmm.
The Fed still has something like 4 trillion worth of MBS on the balance sheet. I don't know how much, but it's multiple trillions. 2 trillion MBS, fine as well. Multiple trillions. Again, way too much. If the Fed were to sell all their MBS into the market right now, not only would the banks die, but housing prices would crash.
Right. It's true. Yeah. So going back to the insanity that we mentioned, because it's a huge deal, right? We're talking about the US government buying trillions of dollars of their own debt, essentially.
No, they're not going to hit trillions. That's impossible. They can do billions, but they can't do trillions. Because the TGA only has billions in it, not trillions. RRP plus the TGA doesn't mean trillions. It's still billions.
What about the Fed, though?
Well, the Fed buying back debt makes no sense at all either, because it's not the Fed's debt. It would just be QE.
Yeah, that's well, what I mean is just them printing money because they're going to issue so much treasuries that there's going to be no buyers for it. So who's going to buy it?
It will happen via a crash, another repo crisis. It has to.
Oh, so you don't think the Fed will just debase the currency to acquire that debt somehow?
Oh, yeah, sure they will, but not in the initial phase, not in the way they're going to do now. They're going to run QT as long as they can.
Yeah.
Because if they flip QT, their credibility is lost. They can't. They talked away into the corner. You saw what happened in the market in the recent few weeks, just on the hint that rates are going to be cut next year. And the market immediately bakes in twice the amount of rate cuts that the Fed says.
Yeah, you're right.
And the dollar takes an absolute shit.
Yeah.
Faster than rates went down, by the way, which is also notable. So what do you think is going to happen when they actually cut? The DXY is going to drop to the floor, like I've been saying for quite a while. So yeah, it's already happening, what you're saying, but it's just not going to be fast. They're going to drag this out as long as they possibly can because it's their next on the line.
Right.
So when RRP empties out, that doesn't necessarily mean that rates will spike right away. Because bank reserves of banks are actually going up now, which is where the RRP is being stored. So at the moment RRP is empty, those bank reserves still exist. And if they have too much bank reserves, with the Fed having dropped their minimum requirement of bank reserves, they can just convert that cash into treasuries, as long as they think they won't need it for withdrawals.
Mm.
So it doesn't immediately have to spike, but at some point that level becomes too low because you can't have nothing. So there's now debate on where that minimum comfortable level is. Uh, However, I'm willing to bet we'll hit it somewhere in 2024. Like we said, it's an election year. They're not going to cut the budgets. They're only going to spend more. The market has to go up for them.
Yeah. Have you heard about them having to roll over like multiple trillion dollars of treasuries, like refinance multiple trillions of dollars of treasuries next year?
Well, they do that every year.
Yes,
Because the majority of debt at the US is short term. And when I say short term, I mean less than a year.
right, but they can't do it at these interest rates, right?
Sure, they can. They've been doing it for a year already. Well, a few months. So they can do it at these interest rates and just pay more interest on the national debt. It just makes the debt run up faster.
Oh, I think the issue was that there aren't like foreign countries aren't buying it anymore. There just aren't. This Luke Groman always talks about that. He's like, there's no one out there to buy the trillions of dollars of debt they need to refinance.
Well, that's the thing that has me worried for when RRP does run out. Like I said, it does not necessarily mean rates can spike. Maybe the bank reserves or the cash that the banks have can be
Yeah,
converted into bonds, government bonds,
yeah.
but that lasts for a limited amount of time. Effectively, it's like you're bleeding out. You have a limited amount of blood before you die, so you have to at some point put pressure on the wound.
Oh,
Right now, like RIP is like a blood bag that is infusing us with blood so we can just bleed out as much as we want because we're getting a new supply.
hmm,
So
yeah.
at
Okay.
some point in the future, when those reserves go too low, that's what I said earlier, that interest rates might go up on involuntarily because RP runs out, liquidity runs out, there's nobody to buy the bonds. So what do interest rates do? They go up. And the Fed doesn't want them to go up. That's when the Fed has to yield curve control. But if the Fed yield curve controls, they're printing money and it's effectively QE. So they've already flipped.
Exactly.
So all roads lead to the exact same thing. And that's why
Okay.
I've been saying for 4 years now, almost, no, actually 4 years now, that the US was going to hit hyperinflation, the system was going to imminently die. Because it was going to imminently die. We're already dead. We're dead men walking. It's just the Fed coming up with another 4-letter program to keep the zombie going for a little bit longer.
Exactly. So you just gave us the end game, right? Yield curve control. That's where we're going. Endless money printing. So if you buy a bunch of real estate, take out massive mortgages, isn't this a debt jubilee essentially because the debt is being devalued?
No, no, a debt jubilee is literally that you just say, well, the debt was worthless and we just abandon it. Hyperinflation is forced devaluation.
Right.
That means that you devalue the debt until people forcibly throw it. You force people to throw it away because it's not worth anything anymore. But in the fractional reserve system, the money the value of the money is tied to the value of debt. Yeah. There's something that Mike Maloney has said often, in which he is just dead wrong, and that is that currently the dollar is fiat. It is not worth anything. It's not backed by anything. It's dead wrong. It's backed by the US government debt and the value of that debt. And that value of the debt is in turn backed by the people who have to pay it off, the US taxpayer. The US taxpayer is broke. The debt is not worth anything. Thus, the currency is worthless. It's like the Fed says, they don't have spending powers. They have lending powers. Now, that is a simplification. And like I said, the interest rate that they offer on such as RRP when they have no need for cash is new money, is already unbacked fiat money because it's not backed by any debt. But officially, if the government lends money off of a bank and the bank prints that money because it levers up principal, then it's a loan and that loan needs to be returned. And when the bank gets that money back, it's also levered down. They have got a maximum amount of where they can lever to. That's how the value of the currency is backed by the value of the debt. Because if the debt is worthless, but the currency is still out there, then it becomes unbacked. Because there's no way for the currency to return to its origin point where it was levered up.
Interesting. So if I have a 3% mortgage that I got in 2020 and the currency debases like 25% and yield curve control happens, isn't that mortgage practically worthless at that?
No,
Like,
well, no, no. If yields stay at the same place, then that there's multiple factors at play here. See, it's not worthless; it's just worth less.
right.
It's not worth as much as before, but still worth something. You still get the 3% yield on the bond.
Yeah.
And if inflation at the same time in the general economy is 1%, because all the inflation that's happening in the currency is located in just one account,
Yeah, yeah, yeah.
it still has value. People still buy it.
Some value. Yeah. That's true.
And that's exactly what's happening. You've got three bonds yielding 3% that should be worthless, but they're still worth something now because the CPI says that we're at around 3%. So you're quote unquote playing even. However, if you only use that yield from that bond to buy stocks instead of buying the entire money worth of the bond and put it into stocks, you get far less. You get devalued.
Yeah.
So if you put $100 into 3% bond for a year, so you get $103 back. Then you made 3% yield. But you put $100 into Tesla. Tesla doubles in stock price, and you pull $200 out of the stock market. Well, now you got twice your money instead of 3% extra.
Mm-hmm.
There's your hyperinflation.
Yeah. Gotcha. Right. So real estate is a good deal if you can get a fixed mortgage, essentially.
It's yeah. See, because the problem here is that the debt becomes easier to pay because your income goes up.
Yeah.
If your income doesn't go up because you lose your job, you lose your house anyway.
Yeah.
So
Yeah.
that's why, don't take any of this as financial advice, even though it is definitely the financial advice. I'm simply not saying you should invest in this, you should invest in that. I'm saying that because there's this money printing, because there's this continuing increase in liquidity, it becomes very hard to determine what is actually increasing in value instead of increasing in price.
Yes.
Houses will go down in value. We've already seen this because less and less people can afford a house. So the market shrinks. But because there's more liquidity, the price goes up anyway. Why are prices higher now at 6% mortgage rates than they were at 3% mortgage rates? That is inflation.
Mm-hmm.
But if you look at a chart of new mortgage demand, it's fallen off a cliff.
Mm-hmm.
That is actual market mechanics from interest rates being risen. People can't afford the houses anymore. But people is not capital. You have one billionaire buying up a whole block of houses, there's a fuck ton of demand. Because the whole block of houses just traded. That's demand. It doesn't matter that it's 20 people or one billionaire. It doesn't matter. It's demand.
Okay.
We have no way to measure human demand. We only have a way to measure a point of sale.
Mm-hmm. Right. So given your knowledge of what's happening, right, you understand exactly
It's a
what
wealth transfer. It's a massive, massive wealth transfer.
absolutely. You're right. From the people that don't own assets to the people that own assets, essentially. So what assets are you in, because you know all this, what assets are you putting your own money in?
If I had any money to put in it, my own company is the look. All right. No, that's a good way to. I'm putting assets into myself.
That's smart.
The only thing I can carry everywhere where I go is myself.
Yep.
So I'm working on myself. I'm working on my own company. Even though we're hitting hyperinflation, the way to get out of hyperinflation is very simple. Find something that increases in value. This is really the same thing you want to do anyway.
In value, not price, right?
Yes.
Okay.
See, that's the difference. In a normal situation, people measure the worth of something by its economic price, the amount you need to pay at the register, because people are very simple. You should measure it by the value it has to do the thing it does. So if a pair of scissors right now gives you the ability to cut, that's your value. The value of the object is to cut things. Broken pair of scissors that don't cut things are worthless to you.
Mm-hmm.
Doesn't matter what they're made out of, doesn't matter how much they cost, None of it matters. They can't cut.
Yeah.
So if you need a washing machine, the value of a washing machine to you is very high. You should just get one. If the amount of time you save by not doing the laundry manually for 3 hours and just putting things into a machine and pushing the button for 5 seconds, that's a time save. That's worth a lot. So it doesn't really matter what the economic price is because those numbers adjust anyway.
Right.
The washing machine will get more valuable or less valuable depending on the same things as always. They're either more people want that washing machine, and the price goes up, or there's more supply of the washing machine and the price goes down. And that is usually because the value goes up and down. But in hyperinflation, the price always goes up. But it just means that if there's more people that want the washing machine, the price will go up faster than if there's less people that want the washing machine.
Right. So is that why do you like commodities in 2024 because they have use cases?
I like anything with a use case. That does not necessarily mean commodities. Also, remember that many commodities that have many use cases now might not have as many use cases in the future because less people can afford the use case.
Yeah. Like oil's actually been coming down because of the recession demand, right?
And then went back up because of inflation,
Mm,
because of money being thrown at oil futures to speculate.
mm.
That's hedgy money too. Hedgy money is levered up bank reserves. As long as RP drops, that continues.
Yeah.
That's also, by the way, if RP is empty, the market can't go up anymore because there's no more stimulant for the market. The
Mm.
bank reserves will be required to buy government debt because if that doesn't happen, the US government goes broke and there's a lot more trouble with that. So the banks will buy the debt no matter how much they have to buy in order to do that, which means they can't lend as much to the hedges anymore, which means the market can't go up, can it?
Right.
I'm not saying it will crash. I'm just saying that it's going to go down when people realize there's no more liquidity to push it up, and then it'll crash.
Right. So what it seems like a lot of market participants are saying is, well, okay, the S&P 500 barely outruns inflation. So let me look at like the Magnificent Seven tech monopolies. Let me look at maybe some growth tech that actually gives you like massive returns in this
Yeah.
environment.
Well, those people don't even know what they're talking about because they've got no idea what inflation is.
Right.
Inflation is more currency, always, always.
Yeah. Yeah, but looking at the market returns, they're like, well, biotech is up
Yeah,
40,
but that's exactly what I mean, Elliot. What returns against what inflation measured against what?
but measured against like gold, right? For instance, that's what people are saying. Like, oh, well, growth tech outperforms gold in this environment, you know?
Yeah, but gold futures, you mean? You
Yes.
mean the same thing that are subject to the same amount of liquidity that can also shorten object into oblivion?
Yes.
We don't know the value of anything. The market is broken.
Yeah, yeah.
I
No.
can't, I can't, I can't tell you the value of gold right now. I'm amazed it's at 2,000 because it should be much higher. But at the same rate, I'm amazed that the house prices are going up. It should be lower. I'm amazed at a lot of price action. I don't really understand it.
Hmm.
I know the source. I know it's inflation. But this whole process that we're in right now is hyperinflation. We're losing the ability to price things accurately because the prices keep going up. You look at the NASDAQ this year, it had a perfect pattern of the anatomy of a bubble. All stages, 2008, ever since the 2000 tech bubble, 2008 was the first sell off, the bear trap, the peak, the return to normal. Everything was perfectly aligned for the market to go south this November, October ish. What did it do? It fucking bounced. It
Right.
just went straight up.
Yep.
It's There is no logic, there is no reason, there is no real value anymore
Yeah,
because we can't determine what it really is.
exactly that. But I was just saying the retail market psychology that you just see, like on CNBC. That's all I'm saying. So like that's what people are seeing. And you just said it's so hard to even understand that you're confused by it, by all the price action. So it's like what should people do is the question, you know?
Well, I wondered the same thing the last few days as I did the previous years. What is the thing that will really be the thing next year? And
Yeah.
I'm getting the real sense now that it's gold this time. It will finally come to a head, if you will, where this entire confusion where things that are going up that shouldn't be going up at all. You know, the Fed talking about a soft landing instead of hard. We haven't had a landing at all.
Yeah.
There's been like they've done nothing. Effectively, they never raised rates high enough. It might be insane to think about, but they raised rates to 5.5%. We can't even see the difference between a soft landing and a low landing at this point. The obvious conclusion is to reduce inflation, they haven't done enough. They should have done much more.
Yeah, is this
they've just relocated it back into synthetic markets. But the moment that real assets have got a reason to move up again, such as, I don't know, the Suez Canal being blocked yet again.
Yeah, something like that.
It's inevitable. A big conflict. I don't know, too many people going bust. Or just a continual supply of too much money. You can only fool people for so long, and if prices keep going up, if more and more money keeps being made, what are we going to do? Already, like, you've seen the uranium price rise this year. Your uranium news is doing very well. You know how big the mining market is. What is it at now? 40 billion, 50 billion for the entirety of the uranium market?
Yep.
It's a fluctuation of Apple in a day. The discrepancy is already so big. What are we going to do when Apple is a quadrillion-dollar company?
Right.
At some point, people are going to say, look, this is insane. All this market is going to the all this money is going to the shareholders, and my rent keeps going up. My house price, my mortgage keeps going up. This is like the first phase might have been through stimmy checks, but the next phase will just be traditional mechanics, such as the rent should go down. It's not going down. People starting to get angry, and at some point they're going to demand rent control. They're going to point to BlackRock and Vanguard and all these investors in A, B, and B that made a killing so far. Now, it's not the small guys. No, the small guys always suffer. So the small landlords out there seeing this and suffering, I know you suffer. I'm sorry for you. But you're not BlackRock. It's just a different league. Some people will complain. The small landlords are also going to complain against Airbnb, which they're already doing. So those complaints at some point become large enough to become a political force. Once it becomes a political force, there's votes in it. Once there's votes in it, the politicians won't go against it. They'll go along with it. And you'll see price controls. They always do that.
Yep.
In the entirety of history, they always do that.
Always. Yeah.
And once you have price controls, that already, that sends up a massive signal flare to everyone, because everyone knows price controls, there's going to be shortages. You have to buy now. That creates the shortages. Not that the shortages wouldn't have happened otherwise, but everybody knows they would still happen. So it's better to not be part of the people who are suffering the shortage, which accelerates the situation. But it was going to happen anyway, but it's still faster. So people react to the new, faster situation. And that's why curves go exponential. So the whole trick is to be in front of that wave, So I know I've said I've liked gold for a few years now. I hope people have been stacking, because gold already hit its all-time high again as part of a triple top, and the chart does not look negative. Last few weeks, gold and silver have been on a tear because the Powell hinted at cuts next year. Imagine what they're going to do when they actually cut. Imagine what they're going to do when they have to cut in an emergency. Historically speaking, this lines up as well, because most gains in gold and silver have been after they raised rates into a recession, which is also, again, scary, because we have multiple indicators right now pointing that the US is in recession. The stuff that hasn't been as bad as 2000 or 2008. The car delinquencies apparently are as bad as 1994.
Well, that's I was thinking about that too, because it seems like there's always this calm before the storm, rates are high, but then something massively breaks and the whole market corrects. And then the Fed has to cut interest rates quickly. So could we get a huge potential crash in the market because of this terrible economy we're in?
Yes and no. The yes is that the fact the US should have had this crash
Right.
already multiple
Yeah.
times. It
Yeah.
didn't happen.
Yeah.
And now Powell proactively pivoted.
Yeah. Proactively. First time. Yeah.
That's
Rare.
probably, yeah, you know, you're right. You're right. That's probably the first time he's ever done that in the history that he's been at the Fed.
Yeah.
So what the fuck? What the
Right.
hell happened? But that by itself is, you know, stuff that makes the market itself more skittish because that's never happened before. Why is he suddenly doing that? Even if he didn't do it for a reason, even that he suddenly, you know, actually became competent for once, because he's already lost faith so much. People are now paranoid. What does this mean? At the same time, you've got stuff like the BTFP program spiked again. It went up with 9 billion, which one could be a bank failing, but two could also be the banks arbing that program because the recent drop in rates has dropped the yield or the amount, the rate that they have to pay on the BTFP program below the amount that they get from the Fed at the Fed funds rate. So you can literally now lend under the BTFP program, put that money back into the Fed's pockets, stored at the Fed, and get a 0.4% spread of free money,
Yeah.
which the Fed will pay you, which is also new money because it's coming out of nothing, because it's coming from the Fed. But they don't care about that because we're in this frenzy, we're in this mindset. Even if people like you and me can understand this, the people in charge, like the banksters, are never going to get it in time. Nor are they going to care because they're the first ones to spend the new money. So via the Cantillon effect, they get most benefit from it.
Mm-hmm.
So if they even realize it at all, they're not going to care. It's just going to encourage them.
Right. Right. Okay. So you like obviously the assets that have some sort of good use case. You like gold, you like silver, and you like uranium, essentially. Those are like the
Yes.
safe ones for you.
Well, uranium is an easy bet now, isn't it? I would expect that it would go down a bit, especially early next year, because it's been going on a tear lately.
Yeah.
There's no reason to stay out. You know, you just confirm the top. Uranium is going to be a multi-year thing. That is something we can say every year for the next 5 years, probably, simply because of the time it takes to start a new mine. And we see more and more countries going full on nuclear these days. So the reactors alone take a decade to build. In fact, all that I'm saying tonight about hyperinflation and such, that is now the biggest threat to nuclear. Everybody's figured out that nuclear is the future, but the reactor still costs a lot of money to build.
This is such an important point. Everyone doesn't believe renewables are possible, right? Because the government can't afford this like unsustainable technology. Well, can they afford a nuclear renaissance? Is the thing.
If it happens fast enough, sure.
Right. Fast enough. Yeah.
Yeah, because we're in the process of hyperinflation, which means we're not at the exponential part of the curve yet, which means that the money being printed now, it does have some value.
Yeah.
Now, the figure a couple of years ago was already 10 billion per gigawatt. So I would expect it to be more. But let's still say it's about 10 billion per gigawatt of nuclear power. The US just ran up 2.4 trillion of debt in 6 months, less.
Right.
So that's 240 gigawatts of reactors that would probably power a third of America. 1/3 of America, maybe even half.
Right.
The money is still there.
Yeah.
And it has enough value still currently
To do it.
to, you know, build these projects as long as we spend most of the capex quickly. In 5 years, it's going to be a different story. In 10 years, it's probably going to be impossible.
Fascinating. Yeah.
Because that you know, if we had to spend 10 billion in 2019 for a gigawatt, well, it's going to cost at least 12.5 billion now, because the dollar lost at least a quarter of its value. At least.
Right.
And that's what I'm saying. It's incredibly hard to measure how much value the dollar actually lost because most of the time the dollar is measured against its peers, and its peers like the euro, the yen, the pound, all got fucked.
Mm-hmm.
And in the same boat, also devaluing and printing.
What about the cash cow, like coal companies, offshore drillers, and like oil royalties, all this stuff? Do you like those or?
Oil should do fairly well. I mean, as long as the US drillers don't get in any trouble.
Yeah.
Higher interest rates, they don't like that. But if interest rates are going to go down, and it becomes easier to fund the oil rigs, and the US is pumping like crazy.
Yeah, that's right. They are. Yeah.
That has to stop at some point too. I don't know when. Might be decades, might be years, but the Saudis and the Russians keep reducing supply or keep their supply reduced simply because they need kind of the oil price around here, which
Right.
also means that, the US must be the marginal producer. If the US ever runs into a problem where they can't produce oil anymore, it'll just spike. Or not anymore, less. It's never absolute. It's just less.
Well, it is interesting. Biden, he promised no offshore drilling. I think they did the least amount of leases in history. So if like he wins election, maybe woke politics would hamper U.S. drilling.
Nothing. The US is now exporting more oil than it has in ages, maybe even a record.
That's crazy to think about.
Look, US politicians, they say a lot, but
Right. Right. Yeah.
they'll do whatever the reality is. If it's necessary because the economy is about to collapse and they're going to lose everyone's votes, they'll do it.
Hmm.
That used to be the social contract between politicians and people anyway.
Right.
They're all corrupt, they're all liars, sure. But it used to be that if they fuck up, they lose their seat, they lose their power, they lose their ability to, put more money in their own pockets. So they kind of go along with the people anyway, and they're only a little bit corrupt. This is just the last 2 decades that they don't fucking care anymore, and they're just openly as corrupt as they want to be. So,
Yeah.
but in the end, they are still subject to reality as everyone else. So if something major is about to happen, like Europe being cut off from Russian gas supplies and now solely being reliant on the US can't say, well, we'll pump less then. They can't. It's partially the US's fault that we're in this position in the first place.
Yeah, there you go. Man, that's so helpful. You covered that. We covered fossil fuels, we covered uranium, we covered gold, we covered so much macroeconomic. Now, what we're going to be entering into, because a bubble fueled money printing frenzy, right? There's always the question, crypto or the Bitcoin or gold debate, right? So you can talk about crypto. So let's talk about crypto versus gold. And in doing so, you can explain your theory on crypto.
Well, obviously I would be on the side of gold. I'm not a gold bug. I'm not a silver bug anyway. It's just that I've analyzed the situation as well as I could, and I came up with my answers. Reason why I don't like crypto is because, aside from it being a hive of scum and villainy, hacks are so common. Just economically, it doesn't make sense. It doesn't make sense in a normal situation. Now, it might, Bitcoin as a speculative element still reacts to the excess amount of liquidity out there. But it also still has a lot of fraud baked into the pie. Like Justin Sun hasn't gone to jail yet. CZ has. So that's been the highlight of the year.
You did call the downfall of Binance and CZ, which no one else was. So that was a good prediction. Yeah.
Well, Binance isn't down yet because of their deal they made with the DOJ, but they're a giant honeypot now. Like there's, and inevitably it'll be shut down. That suffers from all the same. All the cryptos suffer from exactly the same problem, and that is it doesn't make sense. Bitcoin is the only, Bitcoin is separate from everything else because proof of work outside of Bitcoin has basically died. It's all switched to proof of stake, which is never going to work because literally buying votes. I mean, everybody rails against the US government being subject to special interest, yet they'll support proof of stake, which is literally the more money you have, the more voting power you have. You're fucking kidding me? Really, game? Really? You pull this on me? But proof of work still a bit, Well, proof of work might have its uses, and I've written my own book about it, so I won't completely denounce this. There's definitely value there. It's just that the way Bitcoin is set up means that it has a time where it doesn't make any money anymore because it can't. Look, ignore hyperinflation for a moment. Just mechanically speaking, in a normal situation, Bitcoin would die. The reason for that is simple. At some point, it stops printing Bitcoin because you've got a 21 million hard cap on it. It happens gradually, but even if it would happen instantly, the same thing applies. The people that mine Bitcoin are the ones actually processing transactions, because processing transactions is what they've called mining Bitcoin. Whether that process prints extra Bitcoin or not doesn't matter. But it only matters for the usability of the network, because the less money the network prints, and thus devalues everyone, because every time new Bitcoin is printed, it devalues all the previous Bitcoin holders. Once that inflation stops, where's the money going to come from that the miners need to process the transactions? Because they use power. They use power, and the power needs to be paid for somehow. You can even say, I'll pay for it in Bitcoin directly instead of fiat dollars. That's fine. You can do that. Where's the Bitcoin going to come from that they give to the energy company?
It's supposed to come from transactions on the network, right?
Fees. That's the only thing they have left. It's the only interaction they have with the network. It has to come from fees. I calculate the data if you pay me. But that logically means that fees have to go up.
Yep.
And fees have to go up at the same amount that the Bitcoin miners now get via inflation. Now, every time the Bitcoin network, right now we're in such a situation again. Bitcoin goes up in price, there's more attention on the network. There's nowhere near the mania that was 2 to 3 years ago. Everybody can feel that. There's a bit of hype now, but it's definitely not a frenzy like it used to be.
Yeah.
And transaction prices already going up to the point where it would be unusable for most people, because paying a $50 transaction fee for a $10 cup of coffee, it's not going to happen.
Right. That's where we're
Never.
at. Yeah. Yeah.
Now, and almost no one is using this thing. So the more people use it, the less unusable it becomes. Thus, the less people will use it. It has a ceiling. It can't go faster. Bitcoin can only do so many transactions per once, and theoretically, it's 7 per second. In practice, it's more like 1 per second. That's what it was in July of 2021. So it doesn't do anything. And then they come up with shit like Taproot or Lightning Network.
Yeah.
Still doesn't work. Aside from the code problems with Taproot and Lightning, simply, the fact that it's not Bitcoin, it's Taproot Bitcoin, or it's Lightning Bitcoin, but it's not Bitcoin. It's something else. It hasn't been tested for 10 years. We don't know how secure it is. Bitcoin has been tested for 10 years. We know that, but we don't know Lightning. We don't know Taproot. That's new. We have to see. But aside from that, it's a simple economics problem. If you don't print Bitcoin, all the fees have to come from transactions. If you then lower the transaction cost, where's the money going to come from for anybody that calculates these transactions? Nowhere. Can't happen. It just don't work. It doesn't work.
Yeah, it makes sense. Have you heard of ordinals inscriptions? How they're like,
yeah, they're just going to clog the chain because that all needs to be calculated as well. And ordinals, it's all bullshit. It's all bullshit. Look, it's just code, okay? Bitcoin is effectively a wrapper. And in these wrapper, you can put any kind of code. Now, of course, you can't do it with the active Bitcoin network. And people are playing around with the active Bitcoin network because they don't want to lose that network effect. They don't want to come out with Beanie Babies 2 because their Beanie Babies 1 are going to lose their value. Because that's the only thing that's holding Bitcoin up, is that network effect. Let's talk the real use case of Bitcoin. The fact that it's a slower transaction network than anything else. What is the only place where it's useful? Cross-border payments. Great. I don't plan on going outside this country anytime soon. Are you? How often have you transacted with, say, somebody from Peru?
Right. Not very much. Yeah.
How useful is it? I can tell you that I sold some stock information a couple years back on the coal company right after Biden got elected, and it did very well. So just that. I got money from, I think it was Pakistan, and it required some extra information because you would need to put in international bank details. They still got the money, a couple €100 transferred from that bank to my bank, no problem. So sure, it's not as easy as Bitcoin, I guess, where you just type in an address and it just sends itself, because you don't have to put in all the extra information. But that is offset by the difficulty I have with making Bitcoin secured by itself. Oh, sure, you can remember your seed phrase, but if you have a Trojan on your PC and you make one transaction, you're still going to lose all your Bitcoin. Somebody's just going to take it out of your wallet and put it in their own, and your seed phrase is useless. I've done IT in the past. I know that security through obscurity is not security at all. It will work for a short time, and then you lose everything. And NFTs are just amazing because I remember seeing shit like virus NFTs where people put an NFT in your wallet in which you cannot click on it, you cannot interact with it, because the moment you do, it interacts with the smart contract that steals all the other shit in your wallet. Of course, you can change your wallet address, but that's the same as changing your bank account. You have to update all your information everywhere. And then they'll just send an NFT to the new wallet before you're even done.
Wow. So
Yeah.
if you give out your wallet address, someone could just send a virus to it?
Yeah, because it's code.
Man, it's crazy.
Everything that's saved on the blockchain is code. So you put a virus on the blockchain. I'm surprised nobody's made a virus ordinal yet. They will just be saved on the blockchain forever.
Yeah.
Yeah, you have to really think about the shit, because there's lots of dirty shit to be done. Look, the scammers on Etherscan and such have become so good at generating wallet addresses that look virtually the same as official wallet addresses that they've gotten people at this. When they receive a transaction of a bullshit coin that's very similar to the address that they want to send money at, and then they just send money to the wrong address. Sometimes millions are lost this way. And there's no bank that will call you and say, excuse me, sir, did you mean to send to this known scammer address? It's crypto, code is law. You send it, it's gone. All that inconvenience has to be considered. The only way to do it is to let professional handle it. A third-party custodian that actually knows what they're doing, and a secured app and everything, at which point you're back to a bank.
That's a good point. Centralized exchanges are like banks. Yeah. So can I throw one Bitcoin bull case out there? It's that there's like 2 million Bitcoins left on exchanges. BlackRock, Van Eck, Wisdom Tree, they're all going to launch these ETFs. Could the institutional capital, I'm not saying it's the value is changing. I'm just saying the supply demand fundamentals. Supply is fixed on exchanges. The massive wall of capital from Wall Street, like BlackRock's investors, could pump Bitcoin like crazy.
It doesn't matter. As long as Tether is around, the market will do what those people want it to do. Cumberland is in control of the market, because it's very likely that they are the ones printing so much Tether, or at least washing it into the market. I'm dead convinced that they just keep printing money or keep printing Tether. The peg, Tether's peg, isn't naturally held where it is. It's being held above one by artificial means. But Cumberland is making use of that by just selling printed tethers into the market and then doing something with the dollars it gives back. Probably collecting the spread as a fee. To Tether, it doesn't matter. They print money, or they print tethers, they sell it into the market, they get dollars back, put in the reserves, now it's backed. It's not what they say it is. They're still lying. I mean, they say they get investment money from investors, but Cumberland here could work as a mule as well. Just they give 50 million of their money to Tether. Tether prints the USDT, and they sell that USDT into the market to get the 50 million back, which is how it's supposed to work, except that Tether is keeping the peg artificially where it is, rather than market mechanics keeping it where it is. Put it differently, I saw the Tether market cap go up before Bitcoin did, and every time it goes up, Bitcoin seems to follow. Now there are some fluctuations, it takes a while, but in the end, Bitcoin follows the Tether market cap.
Interesting.
So in that sense,
could you arbitrage that?
Sure. Sure, just go leverage long after Tether's market cap has been going up for a while, and Bitcoin hasn't. It's bound to be a spike. But the danger with this is that there's a limit, and I don't know what it is. Tether can't unlimitedly print money because they're, like I said, they're keeping the peg whether it is by artificial means. Those artificial means might run out. We will not get any warning. We're not even sure how they're doing it. Probably just wash trading because, Binance wash trades everything else. But the problem is with something like Bitcoin and such that it is a limited supply. So unless the supply and demand mechanics of Bitcoin take it down, which means that, Bitcoiners don't get enough inflation, so they need to raise transaction costs, which makes people not use it anymore. As long as that doesn't happen, current situation continues. When does that happen? Well, because you keep having these halvings, I can't tell you. Could happen in 2024 after the next one, because miners right now are already levered up to the gills in order to not have to sell their Bitcoin because they're expecting a massive price rise for the next halving. That doesn't happen, game ends this next year. It's that simple. The miners will just start going bust.
Yeah, it's so interesting. It's all based on the price going up. If not for that, the halvings would destroy it. Yeah.
Yeah, absolutely. Yeah. Each halving would reduce the income of miners by half, and they would compensate that by doubling transaction fees. Because it's the only two ways they get any income whatsoever.
Yeah.
Well, outside of running up debt, but you can't run up debt if you don't have anything of value. The only reason people are willing to lend them money is because they expect to get a return on that money because they expect these miners to sell their Bitcoin at a higher price. If that doesn't happen, they're not going to lend these miners any money for more equipment.
Right.
It's the same mechanics you see in the mining industry, the traditional mining industry, where if the price of the asset starts going down, consolidation happens, and the small miners get consolidated into the big ones because they're the most efficient. So that will also happen with Bitcoin. The problem is that Bitcoin is designed to not have that happen because the 51% attack. Nobody can be bigger than 51% of the market or it's not safe. Now, with real world mining, that's not quick to happen because of the large planet that we have. But there are plenty of companies and plenty of businesses that have an effective monopoly, even on things where you wouldn't think, like umbrellas. Why? Because it's a very simple device with not a lot of variation. So there's basically room for one person who produces it at the lowest cost. And they simply get the market. Lowest cost, highest quality.
Yeah, interesting.
That's the same thing for Bitcoin. The person who gets the cheapest energy will be able to get the highest margin, will be able to afford the most new machines, will be able to grow the biggest, will be able to buy out its competitors, will be able to get maybe more than 51% of the network.
Yeah.
And now it seems impossible because the miners are so big. But again, if the halvings go away, transaction costs go up, people will use the network less because now it's more expensive and less useful to do so. It means there's less income for miners because the transaction volume goes down even when costs go up. which means that not all miners will survive. Some will go down, which means that the hash rate starts going down, but not equally. It went up in a decentralized manner because everybody can buy more equipment, but it will go down in a centralized manner where very specific miners just drop away, but the ones who don't drop away get a larger percentage of what is left. And as long as that larger percentage stays below 50%, it's fine. But considering the bubble it comes from in mining, where the hash rate has never gone down, even when the price has, I expect disaster. I expect the discrepancy between reality and what it actually is worth to be so big that it just craters. People won't give miners money because they expect them to lose value, and they lose value because people won't give them money anymore.
Wow. Yeah, it is true. The hash rate's going up, so it's costing people so much more money to get it, but the price isn't really. So it hasn't, at least. It's crazy.
At some point, because these halvings keep happening, the price needs to go exponential for miners to still get their same amount of income that they get now out of the inflation rate. Thus, either the price go exponential or the fees do.
Right.
And I figure that the price cannot go exponential because there's no actual value in the asset. Once you ignore the price, just look at what Bitcoin is, it's a transactional system. It allows you to transact numbers from one place to another and be secure in that it all happened on the up and up. You know, this is all security network. Again, you can do that with internal databases. It happens with internal databases all the time. The security of the banking network is not the problem. The problem is that the government just won't stop printing money. But Bitcoin doesn't solve that by having a fixed amount of Bitcoin. You know why? Just look at the gold standard. We already had a fixed amount of supply of money. And what happens in a war? What happens in calamity? What happens throughout history when the government suddenly needs an amount of money that they don't have and they're on the gold standard? They go off the gold standard.
Right.
Now, don't get me wrong, because I've been railing against crypto. I still think that the blockchain, also the ability to mathematically limit the amount of assets to being printed in a decentralized network where effectively everyone has access and everyone can print money. That's a major advancement in humanity, in the technology. Don't get me wrong. I'm fully on board with that. It's just that outside of that, you can't really use that for much use cases. You know, Bitcoin as is has one use case, and that's as a central bank settlement currency. Because as long as you use only central banks, you have a small club of people, you can make a gentleman's agreement to only have one server per central bank. Then it's completely decentralized. It's checkable and verifiable with verification nodes. So we know when somebody's running more or less. You know, we can measure that. Difficulty network should always stay the same with the same amount of computing power. And it would allow the central banks to settle large amounts of money instantly because the size of the transaction does not matter with Bitcoin. So at the same time, central banks don't have a lot of transactions with each other on a daily basis. Even in reality, there's this layered system where you've got the banks and then the major banks and then the central banks. And, you know, because no system can handle all transactions at the same time with the amount of transactions that we have. So it's always going to be a layered system anyway.
Yeah.
In that case, you know, because central banks don't really trust each other, because central banks are effectively their own nations and nations don't trust each other, Bitcoin would help. You can trust the math of Bitcoin. You can trust the gentleman's agreement because you can see if anybody adds an additional server or tries to capture the network. There's still like something like 100 central banks and 200 central banks across the world, and there's IMF, the World Bank, the UN, who can have a server as well. Then you still end up with like 500 entities at most. 500 computers isn't that much computing power, but Bitcoin's artificial difficulty allows it to scale, so it functions exactly the same with those 500 computers as the millions and millions of chips working at it now. It still works exactly the same. Still just as secure. And that would allow the central banks to work with each other with a basically replace gold for them, not for us, for them.
Right.
But if you expand the network beyond that, you get too many transactions. And
thank you so much for that rundown. If you want to share anything else, please do. But be sure to let us know where to find you.
Yeah. So just to summarize, for next year, for the coming year, gold and silver finally get their day, and the devaluation will accelerate. We'll see more volatility. The market will go up further with more liquidity. Once it runs out, goes down, and then it's just waiting for the Fed to open the spigot again, which they will, especially in the election year.
Yeah, that makes sense.
Yeah, those are the predictions for next year. Where you can find me, you can find me on Twitter at desogames. You can find me on Twitch at desogames as well. I stream on Thursdays and Saturdays at 9 p.m. Dutch time. Central European time, basically. You can find my company on KirianTechnologies.com, or Kirian.tech works as well. You can find it on Twitter as well as at KirianTech. And I would say, sure, give it a follow, because there's some exciting things that will happen with my company next year. If there's any other prediction I can make, it's my own company. The fruits of my labor will start to pay off the next year. And it's not something that people can invest in, unfortunately. But it is something that will be fun to follow. And I can say that there's discussions going on behind the scenes. I've already talked to a contact. So even though it's been very quiet, I don't really have anything concrete to report. Only hopes and dreams so far. And I don't want to get anybody's hopes up if I have to dash them later. But there are movements. It is getting more positive. I'm excited to go into the new year.